Hello everybody, welcome to another update on the stock screener. Today we're going to continue our talk on Frontera Energy. I just bought the stock. I think there is potential for this to go higher. So this is a very good chart, will probably go up. And as you can see, crude oil is also rising. And I expect that this has not stopped yet. We are going to see much higher numbers. The reason for this is because of, first of all, we have these refiners who are having a lot of profits because their margins are up. So this is the refiner margin, which is the difference between the gasoline price and the crude oil price. So they are making lots of money. And even if gasoline is going down because of demand destruction, even then, these refiners still have a lot of margins, so they will keep on refining, and this will add demand to crude oil. So I don't think crude oil will go down anytime soon. There will still be demand because of these margins. Also, the oil forecast index has just bottomed out here. It's still negative, but probably going back into the positive. You can see here oil stocks are very low, so that will put a bottom in the oil price because there is not a lot of oil left in stock. And when we look at gasoline, we see the same problem here, low gasoline stocks. And on distillates, the same problem, very low distillate stocks. So I think energy is still going to rise in the coming years. Production isn't rising that much, so that's good for the oil price. Natural gas also on the lower range of the underground storage. So that's also looking good. I wanted to show you this interview with Nenner. Let's see what he has to say.
So this whole thing with Russia and gas and selling and the restrictions they're putting on them, this must be long-term bullish for gas and oil. I mean, it has to be, right?
Gas is up for the next 5 years, longer
Wow,
term.
wow.
I'm not talking about small corrections, but the long term is up for the next 5 years.
Hmm. Probably be good to get an extra tank and fill it up now, right? If you're on propane.
Yeah,
Yeah.
yeah. But you might also buy tuna fish and whatever. Everything goes up.
Give me a case of tuna fish to go. And oil too. You think we're looking at? I remember 2008 we had 150 oil. You think we're going there?
Yeah, my next target is 122. Then it's going to hold a little bit, but we could even go to 250. I see.
250. When would? How long would that take?
Will take 2 years or so, but
Oh, 2 years. Yeah.
yeah.
And the 122. Can you conjecture when that would be?
I don't have it in my head, but I would say maybe 2 months or so.
Uh huh. Uh huh.
Okay, so crude oil is going to 122 in the next 2 months. That's already higher. But in the next 2 years, it could go to 250, and that's somewhere here. So it's going to make all-time highs. And if you know that is going to happen, you need to buy oil stocks, of course. And Frontera Energy is probably one of the best to buy right now because of the valuations. So the valuations are very cheap, price to book only 0.7, price to EBITDA 1, very cheap. It should already be double the current price. Earnings around 450 million per year. So that's a PE of 2. So very cheap, and they have growth, 10% growth, I think. But you're buying this because of the low valuation. Also, they own 75% of CGX Energy, and this is a exploration play in Guyana. And very important here is that there's a lot of upsides. So they are doing exploration in the third quarter, and we'll have probably drill results by the end of the year. So as you can see, the share price is only 1.7 here. It can easily double or triple from here on out if they find oil, of course. And if that's a double or triple, then this will add about 300 to 600 million to the market cap of Frontera. You can do the calculation. If they double or triple and they own 75% of CGX Energy, then this will add about 500 million. So it's an easy 50% if CGX Energy finds a lot of oil there. So that's icing on the cake. We have the basic valuation of a double, triple already, and we get another 50% optional icing on the cake on top of that. Now, I'm not done yet, because when you look at the sensitivity analysis, we are now at $120 per barrel. So we're somewhere here. So the EBITDA is around 800 million US dollars. So 1 times EBITDA. But let's say oil goes to 250, as Charles Nenner says, in 2 years from now, then you would get EBITDA of around 2.2 billion. So a company with 2.2 billion EBITDA, how much would you pay for that? 2.2 billion EBITDA. Well, at least 2.2 billion, maybe even 5 billion. So I would probably give 5 to 10 billion for such company. So you can already see this is probably a 5x, 10x stock if we are going to see the oil price play out and go to $250 per barrel. So that's the play here. We are playing Frontera Energy because of the upside in oil, and this could be a multi-bagger. And I'll see you in the next video.